Is your software up to date? This is the IssuesWatch podcast. Hello, and welcome to the IssuesWatch podcast. I'm Matt Charne, your host for this week's accounting and auditing episode. I'm an audit director at Clifton Arson Allen. Joining me today, as always, is Marissa Flood, Assurance Senior at CLA. Welcome back, Marissa.
Thanks for having me.
Always good to have you. This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. Quick disclaimer, the views and statements expressed herein are our own and not necessarily those of the NJCPA or of CLA. Okay, so I'm very excited about today's episode. So today we have an update from the FASB, which I know doesn't normally seem exciting, but it's ASU 2025-06, which are updates to the internal use software capitalization rules, which I think were sorely out of date. Now, being in the technology industry and doing most of my audits within those types of businesses, this is sorely needed. I think for most people at home watching probably think, don't care, not important. You know, my company's been using the same software for the last 15 years. It's either amortized or not relevant to the balance sheet in any way, shape, or form because it's just accounting software, or Excel, or something like that. But this is a big deal for me.
Yes, and for us non-technology space out here, because I am definitely not as knowledgeable for sure about this. However, it is the internal use software, and correct me if I'm wrong, is just software that's used internally with the companies, not sold to customers, just developed for their own.
For the most part,
use.
That's
Okay.
true. If you're running a business that has a cloud platform,
Got it.
technically that could fall under your internal use software.
Perfect.
And the theory behind that is you've developed something for internal use, right? I'm the one operating the service, I'm hosting everything, but my customer is going to get some kind of benefit out of it, maybe a dashboard, maybe some kind of service that my platform is going to enable. And in that case, you would be able to use these rules to capitalize that.
Awesome.
And I think in the space that I work in for software as a service businesses, a lot of those companies are going to take advantage of these rules and make sure that things like that are set up because the work that it takes to upkeep a platform like that is constant.
Yes.
And I think that's where a lot of these changes really come into play and make things a lot better.
I guess that I was going to ask you, because of, the modern development and technology and people kind of going towards that space.
Right.
Is that the reason behind this? And I guess we'll get into it.
The 100% is. So if you read the summary that the FASB put out, the first thing they always put out when they do an update is, why are we making this update? Which is a good thing to have. But the reason for this one is literally to say, modernize accounting for internal use software costs. Stakeholder feedback highlighted that the current guidance was outdated, especially given the shift from sequential or waterfall development to incremental or agile methods. So that's a lot of buzzwords. But I think the key takeaway there is that the standards that we were currently using, totally outdated. And you guys might be familiar with them. If you look under ASC 350-40 right now, you'll see that the standards are set up through development phases. So you're going to have your planning phase. This is a phase where you don't really know what you're making yet. You're kind of testing things out. You're not sure what the end goal is going to be, doing a lot of coding, a lot of trial and error, things like that. Then you're going to have your development phase once you establish something called technological feasibility. Another buzzword that basically just means I know that my software is going to work, and so I'm going to continue to develop it now.
Famous last words.
Exactly. And basically, proof of concept is a better term, if you ask me. And then you got your development phase where a bunch of the coding comes from. In the current standards, that's really the type of work that you can capitalize. And then you get into your testing phase, which, again, you're just working out the bugs. It's more maintenance than it is development. I already know what it's going to do. I'm just trying to make it work for the size of business that I need, or little bugs here or there, little red flags that might pop up, things like that. Everything that we just told you, gone. Don't worry about it anymore.
Perfect.
Nowadays, a lot of developers don't work this way. Especially if you're working on a platform where people are subscribed to it and you're just constantly updating and changing and maintaining and teaching it new things. You don't need to plan an entire program, develop the program, and then test the bugs and then ship it out. This is kind of the mindset for upgrading from Windows XP to Windows Vista, then to Windows 7, then to Windows 10. Nowadays, it's just, well, I'm subscribed to Windows. And you'll probably get updates every 3 months, something like that, 3 or 4 times a year. And so what a lot of developers do these days is called agile development.
Okay.
So that entire process that we just described, where you're taking your planning phase, your development phase, your testing phase, your implementation phase, you're taking all those pieces and you're squeezing that down into probably a 2 or 3 week window, which a lot of developers call sprints. And you do all that stuff. You test to make sure the concept works. You do a lot of the coding. You look for bugs and try to figure those out and make sure it's all maintained and good to go and it can be plugged into your system properly. You roll that out and done. That feature is implemented and you're good to go.
So I can imagine fitting the mold of the old standard. Did you find that difficult since you're dealing with clients like
nearly
that
impossible.
in audits? Okay.
Nearly impossible would be the word that I would use. When clients, or I should say when companies track their time, it does become a little bit easier because you can still kind of pick apart what's planning and what's not. But what I found a lot of businesses were doing was saying, well, I pay my developers a salary. At the end of the year, I'll take a look at that salary and ask them, how much of your time did you actually spend coding? How much of your time did you actually spend planning or doing, admin work or fixing bugs and helping customer service things, stuff like that. And it would usually shake out to 20 to 30% of the time was not coding, and then you just write that stuff off. And then the rest gets capitalized. And so that's how the agile development kind of fit into that old standard mold. But getting back to the updates that we're making these days, ASU 2025-06 is going to get rid of all that stuff and say, at a very high level, there are really only 2 criteria that you need in order to capitalize your software, right? Management has authorized and committed to funding the project. That's step number 1. Usually pretty easy. I know I want to build something. I know I want to change this feature. I know I want to update my platform. I know I need to overhaul everything, whatever the case may be. Is it authorized? And are they putting funding toward it? Is somebody getting paid? Are they taking out loans for it? Or did they do an equity raise to get the cash in? Whatever it may be. That's step number 1, usually pretty easy to prove. Step number 2, it is probable that the project will be completed and the software will be used as intended. So a probable to complete threshold, another new buzzword that we know the FASB loves to throw around. So what does this really mean? Entities must evaluate, another buzzword, significant development uncertainty, which really means, is your software going to have novel or unproven features that maybe there's a performance requirement that you're not really sure how to work that out? Stuff keeps changing. This would probably be something under the old model that you throw under your planning time, right?
Okay.
But nowadays, people don't really do that anymore. They're kind of building and implementing things all at the same time and then planning for the next thing as they realize what might be working and what might not be. And so what the standard is asking you to do is say, even though you've committed to funding this and you're working on it, whatever you're building, do you know for a fact that it's something that's been done before? Maybe you've done it before and you're just improving it.
Okay.
Maybe a competitor has something similar and you're just trying to, keep up the pace, something like that. Or is this something totally novel? This feature has never been done before. We don't know if we can get it to work at all. If that's the case, then this little threshold, I think, will create some kind of percentage or a window of time of development expense that you probably won't be able to capitalize.
That would make sense.
Now,
Okay.
This is still a brand new standard, and I'm not sure how many companies have implemented this or not. We'll get to the effective dates and everything, and early adoption is allowed, but I think this was released at the time of filming maybe 2 weeks ago, 3 weeks ago.
Yeah, it was.
So I can't
this just
imagine.
came out.
I can't imagine too many folks out there have actually used this yet. That being the case, we'll wait and see and maybe report back as to what this looks like when we have examples of what a significant development uncertainty looks like or how that's accounted for. But my theory, again, it's going to be a percentage of time or some kind of window of time when you were working on something, not really knowing that it was going to work, and maybe you threw that piece out and started something different.
Yeah, I could definitely see new technologies that we see forming. That's going to be really useful.
Yeah, a lot of the AI companies, I think, are going to take big advantage of this.
Yes.
And say that, maybe there's something totally novel. It's a physics-based AI model that can render, physical problems in the real world perfectly. That's novel and unproven, right? We don't really know how to do that. At least I don't. But other language-based models are pretty much proven at this point. So if you're just trying to get into that market, I think it would be fair to assume that this is not novel, and maybe it's novel for you and you're still working out your kinks, but there's probably a decent chance that you're going to get a lot of percentages in there. Now, one other thing I wanted to point out about the standard is that website development costs, which are typically separate from your internal use software, which is typically related to some kind of platform or something used internally, maybe even inventory systems can fall under this if they're custom made. The website development, which goes out on the internet, could be used for advertising, marketing, consulting, stuff like that. All of those rules have been folded up into what we just talked about. So all the separate standards under 350 for website development, which got a little complicated based on IP and what exactly the website is being used for, who owns it, who hosts it. It's all getting folded under this now, so it's going to be a lot easier to account for.
That is exciting.
Yeah.
As we've already established with Matt, this whole update is exciting.
I know, but, don't take it from me. We've got two opinions over here that are the same.
Exactly.
Right. So, I don't know. I think this change will be great. I'm looking forward to talking to clients about it, making sure that we can kind of get an understanding of what early adoption would look like and things like that. The article that we read kind of summarized that for most software, capitalization probably won't change much. I think that's the case if you're already doing an agile development and you're just going to find a way to shift that 20-30% of planning, admin, testing time into, making sure that it just gets captured under your significant uncertainty. And that'll probably translate pretty easily one for one and just make the testing and the documentation a lot easier. What surprised me was that the article said for cloud computing arrangements, so probably what we're talking about here, a lot of SaaS-based companies, this is going to lead to a little bit less capitalization.
I did see that when I was reading the article.
Yeah, I don't necessarily think I agree with that.
Okay.
And I'll tell you why. Because less capitalization would mean that there's time being capitalized right now under the old model that isn't related to actual web development. But the standards that we're creating seem a little bit looser. And not in the way that we're going to capitalize things that don't work, but in the sense that it's easier to define what's novel or unproven than it is to just say, well, I was planning to build something, and then maybe it didn't work out. And I feel like if it didn't work out, it's easy enough to take that time and kind of throw it away. But if it's novel or unproven, then you certainly know you're not going to capitalize something until you have proof that it's going to work, right? Your proof of concept.
That would make sense.
As opposed to making sure that if it's just maintaining something and trying to scale something up and then maybe that doesn't work out. I don't necessarily see anything in here that says you can't capitalize that because you're committed to funding it, you've authorized it, and maybe you could get under the same kind of thought process and say, well, that's a development uncertainty because I had to throw it out. Mm-hmm. But I'm not entirely sure if you can salvage bits and pieces of it. And I think that's where some of the gray area is never going to go away, regardless of what standard we use. But
yeah, and I think we'll have to see it kind of come into play to really see how it gets done.
Absolutely, yeah. And as these interpretations start to come out and we get guides from larger accounting firms, I think it'll become a lot easier and it'll make a lot more sense.
And what this is effective
thank you.
After December 15th for periods after December 15th, 2027?
Periods after December 15th, 2027. So there's still a decent amount of time to adopt this if you're very comfortable with your old standards. I surmise a lot of technology companies that are using the old standards are going to want to early adopt because it makes a lot more sense to do so. Yeah. It just seems easier to fit this model under how more modern development happens. But yeah, December 15th, 2027, so we've got a few years to kind of figure out how the accounting for this is going to work.
You'll have to report back to us to see if any of your clients decided to early adopt or not, see if they're as excited about it as we are.
Certainly will. If I can get them excited, then we'll all be excited. All right. Well, in closing, here are some upcoming webinars and events. On October 17th, Renee Rempula is presenting 2 4-hour webinars. In the morning, she'll discuss understanding non-GAAP financial statements, and in the afternoon, she'll discuss understanding private company financial statement disclosures. The Society's annual Accounting and Auditing Conference is on October 22nd. And on October 30th, the Southwest Jersey chapter is holding an A&A update in Haddonfield. Get details on these events and more at njcpa.org/events. And be sure to join the Society's Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Thank you for watching or listening.